it's time for Ask Annex. If you got a question for us, we are wide open at annexwealth.com. Click that Ask button. If we can help you, you click the Get Started button. In the studio today, Sarah Kyle, Wealth Manager and Interior Designer at Annex Wealth Management. Well, that's an off-air conversation, but I learned things today about you.
Hi, Danny.
Hey, welcome. Matt Morzy, Investment Team Manager and a CFP at Annex Wealth Management. Welcome to you.
Hi, Danny.
All right. First one is from James. I'm enjoying your SWOT podcast. Recently, Matt talked about investments in emerging markets. Does that mean investments in companies in those markets or the entire region? That's a great question, James.
Yeah, it is a really good question, and it is helpful because at times, we speak in jargon or we talk over a certain level, and it's good to take a step back and kind of go into what that means. So from our perspective, emerging market investing into the company level is not what our expertise is. We find it helpful to either use index funds that are covering a certain area or to use an active manager who has people that live in those countries that actually are doing that boots on the ground type of research, visiting them and knowing what's really going on, which is one of the hardest things when it comes to international investing is really know what's happening in those countries. As you could take China, the largest EM country in the world and frankly the second largest economy in the world altogether.
Haven't they emerged yet? Aren't they huge?
Not yet, supposedly. So we'll see how long that takes. But it's really nice to know what is actually happening there, when politics can have such a big play there. And also the second thing is, and we always talk about know what you own, is that depending on the ETF or the mutual fund that you use, they might invest in the emerging markets in different ways. So they might only use companies that are domiciled over there. Some active managers will take U.S. companies that have a large share of their revenue and use those companies as well to gain exposure into those areas as well too. So you might actually be buying U.S. companies when you think you're only buying companies that are in those countries.
Two things, James. Thank you for listening to the SWOT podcast. And there was a lot of talk about EM last week.
Yeah, it's certainly a big area of opportunity that we see.
Yep. Next one is anonymous. What's the most common way people own gold? That's another good question.
Well, when people think about investing in gold, they think about those big, shiny gold bars locked away somewhere in a safe. But I would say the most common and convenient way to own gold is through the gold funds and gold mining company stocks. But a lot of people do buy the physical gold, and there's pros and cons with all of those options, right, Matt?
Yeah, there's a lot of commercials if you watch CNBC or any financial news network in terms of investing directly in gold and owning physical bars or coins. Tough part about that is now you have to store them. You have to buy them. There's usually high fees in order to do so. And then you've got to have a place that's secure that you would keep all of that. That's one of the reasons why I really like ETFs. It's because they'll buy the gold and house it for you. And that's all part of the internal expense ratio of those funds is to be able to do that. And then gold miners, like you mentioned, now you can at least look at a company's balance sheet and see how profitable they are. So it's not just the gold price that's important, but also how efficient they are.
I want the safe that you open and the light shines in and then the light glints
or
off.
the coins that you could jump and swim through like the old cartoons.
Yeah. Next up on Ask Annex is from Paul. If there's good news on a company and the share price goes up pre-market, is it a good idea to buy as soon as the market opens?
So, companies, especially in extended hours trading, could trade pretty volatilely. There's not a lot of volume during those time periods, and prices can move quite a bit. So it's really important to know why that company's stock price is moving the way that it is. You also want to know how you think a company should be valued at that point in time, too. Just because the market says that it's going up today, is it too high now compared to what your price target was for it? So you want to look at things like that, but also, especially around earnings, companies tend to trade the same way coming out of earnings reports as they have in the past. So there might be some patterns that you could look at where maybe they shoot up really high right away, but then pull back a little bit, and you might have another chance to get back in.
Yeah, and the first hour can provide the most liquidity, but it also provides a lot of the volatility and overreaction both on the upside and the downside. So as an individual investor, I think a good rule of thumb is to wait after the first hour trading when all those market orders that were entered have cleared the books. But if you are worried about a particular stock going higher without you, just buy half of a position, wait till the trend is established through the day, and if it goes higher, you already have some, and if it comes back in, you can buy a little more.
And you spent many years on a trading desk, right?
I did, yeah.
So you saw this, right? Next, anonymous, and it's kind of like our last question. I watch too much CNBC. After market close and during earnings reports, I see the price of the equity in, quote, aftermarket trading. How does one trade aftermarket?
So not everybody is able to. It really depends on, where you're investing. So at different custodians, they have certain rules around that, and you need to have access to that time period. It is a difficult time period in order to invest. There's lack of liquidity. It's all electronic trading, so it's really just matching up different orders. And it's also a limited time period as well, too. So the volume could be really low, but the price action could be quite a bit. And so it is something that you need to really watch out for if you're going to do it.
After hours, you have to go on your custodian and actually indicate the term. So if you're trading pre-market, you can't just put a market order in. You have to actually say, put a limit order for one. They don't accept market orders. You put a limit order and then select the option extended hours.
That is Ask Annex, folks, for investment and retirement planning, tax planning, and estate planning. We do it as a fee-only fiduciary. Know the difference. Website, annexwealth.com. Click that Get Started button. Sarah Kyle, Wealth Manager at Annex Wealth Management. Thank you.
You're welcome, Danny.
Matt Morzy, Investment Team Manager, CFP at Annex Wealth Management. Thank you.
Thank you.